please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Mid-Cap Radar. Bank of India numbers at the bottom of your screen. Net profit at 95 crores, but there is a tax credit, which I think largely explains the profit number. The tax credit is to the tune of some 790 odd crores or so. I mean, actually, if you knock that off, then you basically would have a loss. I mean, on a steady run basis, you would have a loss if you knock off the tax credit which came through, which is 790 crores. But even then, I mean, it is better than the almost 1400 crore net loss poll that CNBC TV 18 had put out. Provisions are much lower, 2564 crores compared to 6674 crores. And I think we have the gross NPA numbers coming in at 16.66%, which is slightly higher compared to the previous quarter. Net NPAs at 8.45 are slightly higher, about 20 basis points higher compared to what we saw the previous quarter, that is the fourth quarter. So, Meera, how do these compare against, I mean, if we had the NPA expectation?
Actually, for NPA, there wasn't an expectation, but, in terms of the absolute number that we have, the gross NPA has come down by about 200 odd crores. As a percentage of the book, the gross NPA, you can say it's pretty much maintained. It's come in at 16.66, which compares with 16.58 in the previous quarter. In terms of net NPA, there's a slight increase in the percentage number, which has come in at 8.45%. Abhishek has the fine print as well. Abhishek, over to you.
Well, let's speak on the asset quality front. The gross NPA and net NPA and absolute value have declined by 3% and about 1% respectively. So, but the gross NPA ratios have increased. So the NPA ratios have increased because the book has declined. You look at the loan growth. The loan growth has come off by 10% on a YY basis and about 4% on a sequential basis. The bank has reported a net profit only on account of tax write-back. There is a tax write-back of 790 crores. That led to a net profit of 95 crores as against a PBT, that is profit before tax, being at a loss of 695 crore versus a profit of 134 crore YOY. The NII growth is strong, but the fact that other income growth is not that strong. Other income declined by 49% YOY and about 40% sequentially. Back to you.
Thanks very much for that, Abhishek. Meanwhile, Dabur also coming out with numbers. I think so far it looks pretty much in line, actually. So profit at 329 crores compares with their own poll of about 336 odd crores, which should roughly be about a 24-25% growth over there. The top line has come in at 2081 crores, which is just, a tad bit ahead of our numbers. So there, the growth should be roughly about 15 odd percent. The key to watch out for will be the domestic volume growth. The expectation was that it should come in between 12 to 14%. 386 on the EBITDA. So that's also bang in line, actually, with our own number. Mangalam is here with us. Mangalam, congrats. Your poll got it almost right. What do you have to say?
Well, the street got
margins, though, are a bit lower, huh?
The margins are a little lower as against the... Okay, volume 21%, our director tells us. So if that is true, that is a big positive, because we were working with a number of anywhere between 12 to 14%. Some part of the street was working with around that 15-16% mark as well. So 21% is something which is quite a positive. Trying to take a look at how the other businesses have done as well for Dabur, just trying to find out. Okay, there we have it. We have comparable revenue growth has actually come in at 19.6%, which is a little better than expected. International business has grown by 10.5%. Shampoo business grew by 30%. That is on account of the Vatika relaunch. That is a positive. Honey sales have grown by about 42%. That again is a positive. The last 3 quarters, the honey business has been doing well. Food business has been doing well. That is a sign of the competitive intensity coming off. Health supplements grew by 27.5%. Trying to look at oral care business. Yes, there it's a 17% growth in their oral care business. Not too good as far as the last 3 quarters are concerned. That trend hasn't continued, but 17% is actually not bad. 42% growth in honey is a positive. Health supplements growing by about 27.5% again is a positive. So all around positive numbers. 21% volume growth is something that the street will really like.
You know, how does this volume growth being, right? I mean, even if you take the upper end of the expectation, which is 14%, I mean, 14 and 21, there's a huge difference, right? But if you look at the revenue number, it is pretty much close by. I mean, there's not too much difference. How does that square?
So it could perhaps be on account of, say, maybe something like an increased promotions or, increasing the grammage of a few of the products as well. So volume growth would have been on account of that too. So that is something which, the street would...
the difference is pretty...
The difference is pretty huge.
Pretty
yes,
large.
A large part of that could also be because of the GST rate revision. So the pricing would have been lowered on a couple of these products.
Okay, so that is, I mean, otherwise the margins are something which I think I guess have the opportunity to speak with the management as well in a bit, and we can put some of the questions. But 21% volume growth is just rocking, absolutely no other way.
No complaints about that. In fact, there are no complaints with the numbers. The only quibble you would have is that this growth momentum year on year that was there in their oral care business did not go above that 20% mark that we've seen in the last couple of quarters, but 17% is not bad. I mean, it's a good set of numbers. The stock has moved back into the green, 21% volume growth. And going forward, remember, Dabur also trades at a bit of a discount to the sector. The sector average would be around 40 times FY20 earnings. Dabur trading at around 37 times.
17-20% volume growth is... I think we were for a couple of years happy with under 10% volume growth numbers.
Yep, so I think 21% would have been the highest volume growth that we've seen in a while for sure.
All right, so the stock now at a 52-week high, and we've seen the sharp spike from the lows once the volume growth was announced. With that, let's shift focus then to the technicals of trade. Ashwini Gujral joins in. Ashwini, good afternoon to you. A bit of a slow day today compared to the last few days. What's your sense on the index and the stocks you're watching?
See, today again it's a shallow correction, and the interesting thing is that today retail banks are taking the slack of corporate lenders. So my sense is that Kotak Mahindra Bank, which was negative, I think 1.5%, that's moved into the green. HDFC Bank has come off the lows. So again, you should have short covering both on Nifty and Bank Nifty going into the close, because obviously shorts are not getting too much traction. Plus you have stocks like Reliance and Maruti which are moving up. Also, Bajaj Auto, Hero Moto, so several large stocks moving up. So unlikely that this correction deepens. Having said all of that, Avanti Feed is a buy with a stop of 460, target of 510. Tata Global is a buy with a stop of 242, target of 257. And Hindalco is a buy with a stop of 207, target of 224.
Anything in particular on Avanti in terms of charts that you're seeing, Ashwini?
Well, it collapsed, a few weeks back, and just yesterday, I think it's retested that lows and again started to move up. So a lot of mid caps are, making these bottoms. So Avanti Feed, now your risk is basically 400, and upside just a excursion back to 200-day moving average is 740. So even a 50% move will be a large move once these stocks start, stop going down.
Oh, absolutely. I mean, the recent low was 390 rupees. From 390 in the last, 7-8 trading sessions, it's back up to about 400. And 82, and Ashwini is saying it could go even higher. Today it's up about 5.7%. Ashwini, thanks very much. Appreciate you joining in. We'll catch up with you on the top of closing bell. That is about in an hour's time. We take a very quick break, the first on the show. We come back and we'll discuss an issue which is interesting, which is essentially the government imposing safeguard duties on solar cell imports for a period of 2 years. We speak with two companies, Indo Solar and Gujarat Borosil, both of them engaged in the business of manufacturing these cells. What's the impact? That conversation coming right up.
Hi, welcome back. You're watching Mid-Cap Radar. Last evening, we got news that the government had imposed safeguard duty on solar cell imports for 2 years. Now, this move is, of course, intended to protect domestic players from the steep rise in the inbound shipments of the product. We'll ask Rahul Gupta, the MD of Indus Solar, and Pradeep Keruka, the Vice Chairman of Gujarat Borsil, join us on the telephone line to try and analyze this impact. Mr. Gupta, let me come to you first. Could you explain to us what has been the cost of producing this in China and what has been the cost at which it has been exported to India?
Well, the cost of manufacturing in China is a fluid number. I think that the selling price has nothing to do with the cost equation, and China has been regularly there's been under recovery as well as a lot of subsidies. So that's a very opaque area. We cannot say with any clarity what is the real cost of China. If the demand is strong, then the prices harden. Otherwise, the price can continue to fall to an unprecedented level, which is happening just now.
Mr. Keruka, sir, I wanted to just get a sense from you that in post the imposition of this safeguard, you think the demand could still be met? I mean, would Indian companies require to ramp up capacities, and what happens in the interim?
Well, the question of demand is all dependent upon the requirement from the Indian supplier. As Mr. Gupta just pointed out, from the Chinese into export markets are at prices well below their cost of production, which is why the imports from China of solar products have been subjected to anti-dumping duty, safeguard duty in the United States, in the European Union, in Turkey, and many other geographies. So we have not been able to increase production of solar components in India precisely because such cheap imports have been coming in that there's been no possibility to set up capacity which can then be sold. And now that if we have protection in the shape of a level playing field, we don't need protection per se. We are strong enough to meet them cost-wise on a real basis. But if they are subsidized by the government, then clearly it's very difficult to fight the government of China economically.
Right. Mr. Keruka, could you give us a sense? What is the total demand annually? How much can, at 100% capacity, how much can Indian manufacturers make?
Indian manufacturers currently for cells, which is the subject of this discussion now because the safeguard duty has come on cells, I'm told is about 3.5 gigawatts.
Okay.
And the demand might be much more than that. But the question is that it will take some time before we are in a position to ramp up capacity. I mean, there's a lot of capacity in India which is created. So we have the equipment in India, but that has not been installed simply because the price has been unviable.
I was told the demand is about 10,000 megawatt. Would that be in the vicinity? I mean,
you're absolutely right. It would be about 10 gigawatts or 10,000 megawatts.
And what is being produced is about 3,500. So, I mean, what happens in the interim? When you say...
In the interim, people continue buying from China at the right price, which means at a realistic price, which is what is happening around the world. In the European Union, in the United States, people are paying the right price for these products. And that will allow us to come up with production and with capacity in India. So we have a lot of Chinese manufacturers who set up shop in Malaysia, in Vietnam, and in other Southeast Asian countries. Nobody has come to India. And the reason they haven't come to India is purely because they know that they are undercutting prices and they don't, and the Indian government doesn't offer any kind of relief, even from a price cut.
Gentlemen, just a moment. Snowman Logistics, they're reporting numbers and the stock has spiked up sharply. So they've posted a profit this time compared to a loss in the previous quarter. As well, the operational performance looks significantly improved this time around. So margins there as well seeing a massive expansion. Mr. Keruka, I wanted to just take your point forward. So apart from the fact that people in India, you say, will be buying at the right price, other than that, what's the benefit to the industry then? I mean, if people still continue to buy from China, it's just that the price is right?
No, it's like this, that the moment we have, there's a lot of appetite for manufacturing in India. We have a lot of competence in solar products. The solar cells are being made in India since 2006, and they have been exported to Germany, to other members in the European Union, to the United States. So we are absolutely on par. We are on board in terms of being a world-class manufacturer of solar components. The only question now is that we have been throttled. I mean, economically throttled. And now we've had meetings where the minister has been present, where people from China have stated that, sir, if you create the right environment, we will set up shop in India. So what is going to happen as a result of this, I foresee, is that since the government has announced its intent, we can see perhaps even people from China coming in and setting up production in India, which is how it should be.
Okay. Mr. Gupta, I mean, this is so let's take a look at the second level impact of this, right? This will raise, the cost of bids in the future. The future bidding which happens, I guess the cost has to go up. Would you agree with that? A and B,
yes.
What happens to under construction projects, which essentially had already had tied up, agreed to supply at a certain price, but now this is change in law, which means that they'll have to contend with it. Would there be straight away pass through? Would there be difficulty in that? Your sense?
Well, actually, I'm not from a developer background, but yes,
Sure.
MNRE in order to reduce the ambiguity issued a circular through the Ministry of Power in which the pass-through is provided for contracts that have already been concluded and PPAs have been signed prior to the imposition of safeguard duty in order to give the developer comfort. But I believe that will also require a lot of effort and clarification going down the road. And since it's an issue involving revenue and refund, it will be somewhat time-consuming. But if I may quickly just digress a bit to the earlier question, today I wonder if you're aware that India is importing 3,000 crores a month of solar cells and panels.
Okay.
And this 3,000 crores will easily expand to 5,000 and 6,000 crores if left unchecked, because this is a weak year. 10 giga was last year. This year maybe 8 or 10, depending upon, because we had a 6-month hiatus in the tendering. But the government of India is very keen to install 20 or 30 giga a year over the next few years. So it would be very important to have a local manufacturing base, because also we have to look at the issues of supply shocks, energy security, current account deficit, employment, and research and technology. So the biggest advantage of this is that we should also become an export hub. We have a huge export capability as well. Today, 90% of any product sold anywhere in the world is made in China or Taiwan or China-controlled Southeast Asia. So I think that India, being the second or third largest market in the world with an extremely ambitious renewable energy program, has no choice but to strategically protect itself with a large manufacturing base.
Oh, absolutely.
And,
I mean, I actually,
so far as the cost of power increase is concerned, it's a reality of life that you should not expect to build the foundation of a 100 giga or a 200 giga platform on unsubstantiated and below cost pricing. That will only lead to a massive chaos in the future. Whatever little bit of tariff increase will be there, it will be mitigated within a year or year and a half as the manufacturing base expands.
Fair
and
enough.
that will only expand when there is a barrier.
Sure, and that barrier has come now. I mean, actually, even without help from very cheap solar cells from China, I mean, some would have said that the cost of, even if you exclude that part of the cost part aside, the solar cell cost aside, some would say the bidding has been extremely irrational at 2 or 2.5 odd rupees or so, and this resembles the madness we saw in thermal bidding at the peak of that cycle. But Mr. Kheruka, what is the impact on companies, on your company? Could you just briefly tell us? Will capacity...
The impact would be...
Yeah, utilization rise,
Yes,
what will happen?
We had already taken up expansion, an expansion program to double our capacity. As far back as January this year, based on our own assessment of the situation and the fact that the Indian module manufacturers could not always depend upon Chinese glass coming in. So we have already embarked on that capacity and sometime in the second quarter of next year, we should be in production. We are currently doing about 1 gigawatt of capacity, and that we are looking at doubling it. So after doubling, it should come to about 2.2. That's our position. I want to just mention something about the pricing. About the pricing, the impact of this scheme on pricing. Okay, so in January, the government had come up with a recommendation of 70% safeguard duty. All right, and in March there was a tender in Gujarat, I think, and the prices quoted in the tender were about 3 rupees a kilowatt hour. So the people who were quoted had factored in the possibility of a 70% duty coming in, and we should remember that the price of power from thermal sources is 3 rupees 41 as we speak now, based on today's rock bottom prices of coal. Now, so even with a 70% safeguard, the prices quoted were 3 rupees. So we're still below the cost of power from coal, which is otherwise the cheapest source of energy. And now with a 25% duty, safeguard duty, the price should be well below 3 rupees, which is still very robust. It's extremely, lucrative, even after paying for this.
Mr. Gupta, very briefly, what is your capacity? Is the capacity expansion program already underway, and what is the impact on your company?
We've been fighting and hoping for this day for 5 years. As you may recall that in 2014, we had a favorable recommendation for 100 to 200% duty. But nonetheless, the 90% capacity that is being lying idle in this country, hopefully now it will get a chance to revive. So we have 250 megawatts and another 250 megawatt under installation that had been frozen due to the pricing situation. So we expect to be able to ramp up to our half a giga capacity shortly and continue to run that. That's all.
All right. Thanks very much. So extremely positive for both of you. Appreciate you joining in, Mr. Gupta and Mr. Keruka. And good luck. We hope to see the impact of this starting to flow through both your P&Ls. Appreciate you joining us here on CNBC TV 18. We take a very quick break here. We'll come back more on markets and stocks in a bit. Okay, 24 points lower on the Nifty, so there's not very much by way of change there. I just want to highlight 2 or 3 indices. The real estate index is the top gainer. I mean, I think we can say thank you to DLF, which is up and has been up for a while now, getting closer to the 200 rupee mark. So that is the real estate index. And on the downside, you got some profit taking coming through in the PSU bank space. I mean, actually only the PSU bank space with any meaningful cut, and it's flowing through in the bank Nifty, which is down about 0.5, 0.6 odd percent. And actually even the private sector bank index is down 0.5% or so. With that, it's a wrap here on this edition of Mid Cap Radar. Thanks very much for staying with us. Your stocks follows in just a bit.